Hey everyone, welcome to today's webinar. It's so great to have you all with us. Today we're going to be talking about accounting fraud with fraud expert Amanda Whitney here. We're going to look specifically at how you can protect yourself in QuickBooks, since I know that's the accounting software that most of you guys are using. But before we jump into things, we'll kick things off with an introduction, and I see there's a few of you guys already on the call. If you want to share, your name, what you're looking to learn, and potentially where you're, joining from, we'd love to get to know the audience a little bit before we dive into the awesome content Amanda has ready for you guys. So in terms of intros, I can start. My name is Elish McCann, and I lead the SEO and content marketing team here at Method. We're best known for being the #1 QuickBooks CRM, if you haven't heard of us before. And I may also be a familiar face if you have been on some of our previous webinars. So with that, I'll pass it over to Amanda.
Thank you, Elish. And just to give a little bit of background to myself, as Elish said, my name is Amanda Whitney. I am a certified fraud examiner. I got my certification just over a year ago, and I studied at Seneca before that. Before that, I was a bookkeeper for about 15 years. I'm still a bookkeeper in my heart, and I currently work at RBC as an investigator in the anti-money laundering department. So yeah, I am passionate about all things fraud.
I know too, we have a few Americans on the line. So if you're not familiar with RBC, it is one of the banks up in Canada, one of the national banks.
Yes. There is an RBC in the US, RBC Georgia, but I think it has a small presence, I think.
That's great. All right, and with that, we can dive into some housekeeping stuff just before we get into the nitty-gritty of accounting fraud. So first things first, this webinar will be recorded. So if you do have to leave us at any point in time, do not worry. We will be sending you the recording straight to your inbox, likely tomorrow or Thursday, so keep your eyes peeled for that. Again, you're more than welcome to share the content. We would love to help more small businesses protect themselves from accounting fraud. So really and truly, the more the merrier that see this recording. Beyond that, if you have any questions, we will have a formal Q&A at the end. But if anything pops up while we're talking, feel free to shoot us your question. How you can do so is you'll see the GoToWebinar control panel somewhere on your screen. There'll be an option for you guys to ask questions. So you can just type away, send it to us, and we'll either answer it live, during the presentation, or we'll save it for the Q&A. Again, we'll do our best to get to all the questions, but there's only so much we can do in an hour, so please bear with us. All right, I think that's basically it for housekeeping materials. So with that, we'll dive into our first question here for Amanda, which is, what even is accounting fraud? Please enlighten us. I think
Sure
you
thing.
might
Can
be.
you still hear me? I lost you for a few seconds there, your audio, but it came back in. Am I muted? Can you hear me? Yes, no?
Good on my end?
Yes? Okay, great. Yes, good on your end. Okay, so what is accounting fraud? So fraud in general, basically fraud relies on deception. And fraud is any activity that relies on deception in order to achieve a gain. And so the idea with this, and this gain, it could be money, as that's typically what we know. It could also be power, influence, a contract that you might be gunning for, that kind of thing. The main thing is that it is a deception, and it is an intentional deception. You know what you are doing. You know that you are deceiving somebody in order to get what you want. In order for fraud to happen, there's this idea called the fraud triangle. And this is basically the theory that in order for fraud to happen, three things typically have to be in place. Now, this isn't a model, this doesn't cover every single fraud out there. This isn't like, it's going to be guaranteed that every fraud's is going to be this way. Sometimes people just want to watch the world burn, right? But it is a good benchmark for, typically how fraud happens. The first thing that has to be in place is what's known as perceived pressure, and you see it on the left arm of the triangle there. Pressure, it can be external, so it could be we have to meet our quota, we have to make our sales, we have to please the shareholders, that kind of thing. Month end is coming up, we have to make sure we get to our targets. It could also be sorry, that was internal pressure. Is external pressure is I have gambling debts. I can't make my rent. I can't pay my mortgage. I'm going to lose my house. I have to send my child to school. They really want to go. Everything depends on this. External pressure is something happening within our lives. The second part that we need is called rationalization. So, how do we actually rationalize this decision in our head? A logical person typically doesn't just lightly decide to go and commit fraud, right? It is a heavy decision to make. And so we want to make it okay in our own minds. We want to make this seem like the right decision for us. So, rationalization might include things like, you know what? The company's never going to pay me what I deserve anyway. They're corrupt, so what's the difference, right? If you have a toxic work environment, that's a common one. Um, and other things like if I don't do it, people who depend on me are going to suffer. That is a big one, and that was never more apparent than with the pandemic, right? If you want a good example of rationalization, all of the CRA is struggling to keep up with all of the fraudulent claims of either CERB or I think SUS and SIRS was the other one. I filed so many SUS and SIRS claims, and we tried to do it by the book, but none of my clients did this. But you could start to see the wheels turn, because in the early days, right, if you wanted to qualify for these subsidies, you had to have a very hard cutoff of what your revenues were. So you had to show that you had exactly 30% revenues drop or more, right? And what happens if you get to 29%? 29%, 1% of revenue drops is what's keeping you from some life-saving subsidies that could save your company, that could keep your staff. And that's when you start to hear questions like, well, what if we just moved the revenue over? Like what if we just held on to these checks and waited to deposit them? That kind of thing. That was technically fraud. But, in our minds, of course, if we don't do this, our staff are going to get fired. The communities that we serve, I did a lot of nonprofit work, is going to get, the community's going to suffer. So it makes sense in our minds. That's rationalization. And then finally, we have perceived opportunity. Now, perceived opportunity is how much access do you have? How possible is it for you to physically just commit this fraud? How easy? So it's things like, do you have access to the bookkeeping software? Do you have access to the banks? Do you have access to the checks? That kind of thing. And when it comes to the opportunity, when it comes to fraud control, this is what we are trying to control. We are trying to control the opportunity people have, because we can't control how much pressure somebody might feel in their lives. We can't control how they think. We can't control any of that, but we can control the opportunity. And when you think about who might be possible, who might be capable of doing this, it's anybody, right? It's you, it's me. We might think of ourselves as the most ethical individuals, and we might be right now, but you never know when your back is against the wall, you'd be amazed at what kind of thought process you'll start to go through. That's not to say that you should walk around super paranoid of everybody around you. I'm going to probably say that a few times during this presentation, but you should always give pause before you consider yourself completely safe from fraud.
For sure. I think the key takeaway there too is to be critical versus paranoid. I think that
Critical
one's
versus paranoid. That's a very good term for it. Yeah.
yes, for audience well. So for anyone listening, Amanda, I know we've talked about anyone and everyone is capable of committing fraud, but do we see any groups of people that are particularly vulnerable to having fraud committed against them?
Particularly vulnerable. So I actually see small business owners, actually, small nonprofits, that kind of thing. It's tough, right? When like I've worked at small businesses pretty much my entire career, and for the first time ever, I work at a giant bank. There are internal controls and checks and balances like all over the place to make sure we do that. When your resources are low, and and we'll get into this a little bit, when your financial literacy is low, like if you're starting a business, the unfortunate thing is that no one really prepares you for the financial side of it, right? So that makes you a bit more vulnerable because it means that you don't have the time to watch over everything. You don't have the resources to watch over everything. And it means that you are maybe in that way more at risk for fraud. There are other risks as well for the big companies, but for small businesses especially, I feel like they're a bit of an easier target almost.
Makes sense. Thanks for sharing. All right, moving on to our next question. I'm curious if you can share what the biggest gaps are for businesses when it comes to secure accounting practices.
Yeah, for sure. So, the biggest one that I see is internal controls. So, I brought up this before, a lack or collapse of internal controls. I'm certified through the Association of Certified Fraud Examiners, and one thing that they put out every year is called the Report to the Nations. And they basically survey a bunch of companies that have had fraud committed, and they compile a bunch of statistics together from all over the world. And I think it was something like 40% of all fraud committed occurred primarily due to a lack of internal controls. It was a staggering percentage, and that's one of the biggest ones. Internal controls is so important, and like I was saying earlier, for small businesses, they're one of the most difficult things to implement because if you're a small business, maybe you are only like, you might have 100 employees, you might have 3, right? And when you have that small of an operation, it's hard to actually like figure out how to best divvy up the resources and who has time. The other one that I see is separation of duty. This is sort of related to internal controls, but um, often when frauds occur, it's because uh, it whoever's committed it has sole control over something. So for instance, if you have a bookkeeper, I actually just did a presentation on how bookkeepers can protect clients from themselves because we're given an awful lot of trust. And when you only have one person having access to a system, that increases the likelihood that they can get away with fraud because nobody else is looking at it. Another example is if you have cash sales, right? If you have cash at the end of the day. You don't just have one person count the money, then take it to the bank or fill out the deposit slip, deposit the money, take it back, enter it into the books, reconcile the bank. If you have one person doing all of that, that is a big increase of fraud because what is to stop them from maybe just taking 20 for themselves? Nobody else knows. So you always have, if someone's counting the cash, there's usually 2 people present in the room, right? Or might be somebody who counts the cash, someone else who deposits it, and someone else who then reconciles it in the books later. That's the kind of thing we talk about when we talk about separation of duty. And then the final one, which I mentioned just now, was financial literacy. And this is like through no fault of business owners or just when I worked with small nonprofits, the financial literacy of executive directors coming in, people get hired because they know programming, they know how to work with a community, they know how to fundraise, but they don't necessarily know how to read a financial statement, right? And they never had time to learn in school. There was no courses offered in that. By the time you actually get your business started up and everything, you're so busy trying to keep the business running that you don't have time to learn how to read a financial statement now. And again, like a little bit of financial literacy goes a long way. You don't have to be an accountant. That's our job, right? Our job is to take some of that burden away from you. But knowing how to read your basic financial statements is so important and can be such a good control.
Totally. And on the note of financial literacy, Amanda, any resources you recommend, like our non-accountant audience today, taking advantage of to improve their financial literacy?
Oh man, you know what? I promised I was like, I was like, oh, I'll go look up some resources, and then but LinkedIn actually has a lot of good resources. I find I just did a course on on internal controls there, right? And you can pay like 60 bucks, $100, whatever, to just get access to a course, and and train your staff as well. It's not just about your financial literacy. Make your company aware of what could go on, because the more people who are aware, the more people who are going to pick up on those little signs, and will maybe the biggest reason fraud gets uncovered is because of anonymous tips, right? Somebody who sees something and decides to report it. Another thing, just there's tons of resources out there. Check out the Association of Certified Fraud Examiners website. They have a library of information there for non-members as well, I believe. And just there's all sorts of things to educate yourself. Yeah, that's what I recommend.
So let's have a takeaway there of information is power. So do what you can definitely
Yeah.
to protect yourself. That's great. My next question for you, Amanda, is what are the warning signs for accounting fraud? What should people be looking out for?
Yeah. So I'm gonna name a few, I think, but there are so many out there. It depends on the fraud that is happening. So there is all sorts of different types of fraud. There is financial statement fraud. There is check tampering. There is invoice. There's asset misappropriation. It's called, is the biggest form of fraud, where it might be like making fraudulent invoices. Like I said, check tampering, tampering with the inventory as well, like if you're stealing inventory. But typically, if you're looking at your financial statements, there's a few red flags that you can keep an eye out for. So, for instance, an example of this might be for an invoice scheme. So, this might be where you generate fraudulent invoices in order to boost your sales, right? The thing is, when you create an invoice in QuickBooks, or in any accounting software for that matter, it's not paid yet, right? An invoice is a promise. It's a promise that you have promised to give a good or service to somebody, and they have promised to pay you. Just because you create an invoice does not mean you have cash, right? So it'll sit there unpaid until you receive a payment against it. If you have a high amount of sales and you're thinking, I'm doing great, but you're looking at your bank account and thinking, but what's happening? I have no money. Take a look at your AR, your accounts receivable. If We'll take a look at an example report later today, but if your accounts receivable is very old, and the old stuff is like a high volume of money, that's something at that point you should be asking questions. Whenever I say like it's a red flag, it doesn't necessarily mean it's fraud. It means you should but it is a flag that you need to look into it more, right? There could be a reasonable explanation. You don't have to leap to fraud right away. Another one related to that is high bad debt. Maybe the fraudster is a little smarter, right? Maybe they don't leave the fraudulent invoices sitting on the books. What do we do when we have old invoices that we can't collect money on? We write them off. But if you have a lot of them, it becomes an expense to your company. So it's called bad debt. So if you see high bad debt on your company books, then take a look out for that, right? Look into it. See what you were writing off. Why? Why couldn't we collect from this customer? Does this customer exist? Did we make them up? Maybe we did. Uncleared bank transactions. This one I will get more into when we look at QuickBooks, but when you're looking at a bank reconciliation report, there's a little section on it that says, here's what didn't clear the bank, right? And that could be checks that you've written that are still in the mail. It could be deposits that you deposited on the last day of the month that haven't quite made it into your bank account yet. But if there's old transactions on there, keep up with those. Those can catch up with you so quickly. And if somebody is fraudulently creating transactions, that might be where they could be hiding. Um, Read your reports. We'll get more into this later in the presentation, but do a year over year comparison. Like look at how things compared this year versus last year, or this month versus last month. Is it normal? Is it expected? Is there a big change? Can that change be explained? Something like shipping costs, for example. Yeah, a little thing called the pandemic made shipping costs go up substantially, right? So if you can't explain it through economic changes or industry changes, or just company changes, then you need to start asking more questions. I have here high expenses, like unusually high expenses in categories where they shouldn't be high, or odd expenses. So, one category that I hate to see people post stuff into in QuickBooks is miscellaneous. If you have a high number of miscellaneous expenses in there, or office expenses, just office, that is the easiest place to hide stuff in, and it's it can balloon quickly if you get greedy. So if things seem abnormally high, or payroll, right? If you have a payroll scheme, there's something called a ghost employee scheme, where you make up an employee and pay them when in actual reality you're paying yourself. So you're generating fraudulent payroll checks. So if payroll costs have increased a lot, you might want to look into that. One thing that, one question you might ask someone is, hey, did we give everybody raises last year? And what was the percentage of raise? If like you've increased $100,000 in payroll, but you only gave everybody a 10% raise, that, and like, you can't reasonably explain that difference. Yeah, look into that. And then cost of good versus inventory is another one, where if you have a high number of cost of goods sold, how does it compare to your actual inventory count, your inventory value? It should be comparable. So if it's not, cost of goods sold is another place to hide fraudulent checks, right? If you're just kind of hiding it in there, you might be paying, you might be thinking you're paying somebody for goods when you're not actually receiving anything at all because the company's made up. I talked about financial red flags, but then there's the non-financial red flags as well. So this whole presentation is about, QuickBooks and how it can help you out. But it's worth mentioning here that that the non-financial red flags are often great indicators of something going on. So the first one I have listed here is control. If somebody is exhibiting a high degree of control over their work, doesn't let anybody else touch it, doesn't want anyone else to see it, doesn't want anyone else helping them, certainly, that on its own, it might not be cause for worry. It might just be somebody who's a control freak. Like we all know them, we all are them, me. So but combined with other red flags, that could be an indicator of something else going on. Fraudsters need a high degree of control over their environment. And so they might, if they're getting away with a lot of it, they might be even more very aggressive about keeping control of their environment. Another one is living beyond the means. If somebody who like about through their business title, through their job title, you might even know their salary. If they come in wearing the best jewelry, like having the best clothes, buying the best cars, they treat people to drinks. That's another thing about fraudsters, is that they're not, they're devious, but the reason they're devious is because they are often the nicest people in your office, right? They're the nicest people at your business. They're the people that you trust the most. One thing that I say to people is no job should be indispensable. When I hear the words, we don't know what we could do without so and so, my alarm bells start going off. I have a client who we let go of a few years ago that I started putting two and two together once I started studying fraud and realized I think there was something else going on. She was the friendliest person in the world, would not let me touch the books. A bookkeeper told me that the bank reconciliation would be too difficult for me. Again, as a bookkeeper, that's literally what I do every day. And I took her word for it because I was young and didn't know any better. But as you get to know these red flags more, it causes more concern. The other one that I have listed here is vacation. You might not think this is a fraud control. I mean, it's ethical. You should let your employees go on vacation. It's also like required by the government. But the other thing it can be used for is a fraud control. Um, one of the things that again, it's that control of environment. So when somebody goes on vacation, it's likely that somebody will be covering for them. Fraudsters often don't go on vacation because it means there's a chance somebody might see what they're doing. So encourage your employees to take vacation, because if someone's refusing, it could mean they're a workaholic. But if there's other red flags going on, then it could mean something else.
Definitely makes sense. Thanks for sharing all those. Really insightful points there. All right, let's move on then. So, kind of our final prepared question. So, audience, feel free if you have any questions to chat us. But is what tips do you have, Amanda, around secure accounting practices and QuickBooks use? Like, what ways should our audience today be protecting themselves in QuickBooks?
Yeah. So part of this is going to be covered by the demo, but this is kind of the high overhead. These are some of the basic tips that I have. So first, check your income statement, check your balance sheet, pull your reports, get access. If you don't have access to your books, get access. I swear, like that's the whole purpose of cloud accounting. I'll be getting to that in a moment. Um, it's so important. If you are uncomfortable with reading income statements, if you're uncomfortable with reading financials in general, I don't blame you. They're intimidating and confusing, and it's basically reading another language. But I can guarantee, as somebody who had to learn on the fly, once you do, it is so valuable, and you can start to put together stories through them. Check your accounts receivable. This one is so easy to let slip. Who owes you money? I'd have clients asking me why is my bank balance so low? I'd had a whole bunch of sales, and the first place I go is their accounts receivable because I'm like, what money could be in your bank account? Whose door do you have to knock on? Accounts payable, that's easy because there are people knocking on your door demanding money, right? Accounts payable is usually kept pretty tight, I have found. But accounts receivable, that's where it takes more work, right? You have to call people, you have to maintain a relationship, and if and you know it can get dicey. And then monitor your banking. So again, cloud accounting automation has made this much more possible. In my personal opinion, gone are the days where we are reconciling monthly, where or even annually or quarterly. I feel like retroactive bookkeeping, if it's done like with the introduction of bank feeds and that kind of thing, reconciliation should be kept up to date because the sooner you catch this stuff, the sooner that you see that things aren't clearing in your bank account, the more likely it is that you will be able to catch something before it's too late. So, particularly checks. If you are still using manual checks, I'm not going to judge you. They're still a very big part of our world. Uh, but I personally don't like them. I'm Canadian, so checks aren't as prevalent here. I know in the US they are more so. Europe, I don't think they exist anymore. But check fraud, despite there are big advantages to checks, like the fact that they physically exist, have a physical signature is good. But check fraud is still one of the biggest frauds there is. So if you haven't moved on to an electronic payment system like Pluto yet, I highly encourage it.
Yeah, Pluto's great. We use them at Method as well.
Yeah,
Uh,
I can't go back. And they come with their own risks. I'm not saying Pluto's perfect, but the trade-off that I got from doing checks, like as a bookkeeper, trying to keep up with uncleared checks, I just I can't. I
I'm
hate
pretty
it.
sure they integrate with QuickBooks too. I know they integrate with Zero, but I think QuickBooks as well. So,
Yeah,
um,
that was the big. I'll be talking a little bit about that in the demo. So yeah,
all right, coming soon. So with that, I will make you the presenter.
great.
Amanda should be able to share your screen then. And essentially for the audience, Amanda's going to walk us through QuickBooks, a software you all probably know and love, hopefully, and just look at some features and ways that you can adjust the settings and your workflows to better protect yourself from accounting fraud.
Great. Thank you. Okay, keeping an eye on the time here. Sorry, I get so passionate. I love to just talk. All right, so um, when we look at QuickBooks here, so I have a fake company I've made up here. It's called Plummeting Profits and everything. I'm going to just show you a couple of features in QuickBooks and kind of also tie it back to internal controls at large. I'm going to start actually with the nitty gritty. Normally I start with the general and move into the nitty gritty, but in this case, I'm actually going to do the opposite. So first things first, we're going to start right where when you're setting up your company, your users, right? So a big thing about QuickBooks is that QuickBooks Online, the whole benefit of the whole benefit of cloud accounting is that you can have more than one user on your company file. I mean, you can do it with desktop software as well. But the thing is with desktop software is that somebody has to have that software installed on their machine. They have to be connected to a network probably, and it has to, sometimes that network is limited to an office space. With QuickBooks Online and with a lot of other with all other cloud accounting, you can add someone as a user, and all they need is an email and a browser. So that's the big benefit. If you're an accounting professional, there is no reason you should be, like, no reason whatsoever you shouldn't have your clients on their QuickBooks files. I actually had a debate with a colleague recently about whether we add clients or not onto our file, and um, he didn't want to, and I totally understand that because we are afraid of what our clients could do in the books, not through fraud, just through mistake. I did have somebody who accidentally turned on the inventory feature when they should not have, and it made a bit of a mess. But that risk has a big trade-off. What it does, you can add people on. You can also give them different roles, right? You don't have to give them admin access. You can give them roles. So QuickBooks has a few preset ones here, and you can make them an inventory manager, a payroll manager. Company admin has access to everything, obviously. Reports only means they can only access the report section of the books. I found this great when I was working for nonprofits, to share this with, like, the treasurer of the board, for example, who would be able to go in and pull their own reports. You can make them time tracking only, or you can make them a standard user, meaning they can access everything, but they don't have the ability to, like, change permissions and that kind of thing. You can also make your own, like, custom role if those don't work enough for you. This feature is pretty new. I haven't used it yet, so I don't know its full extent. I only discovered it the other day. But if you wanted to make your own custom role as well, you can do this. Now, keep in mind, this also depends on your level of access to QuickBooks. So depending on your subscription plan, you might not have access to all of this. I am in like the highest tier of subscriptions for QuickBooks. You might have a user limit. So I have up to 25 billable users on this plan. You might only have 5, depending. So just keep that in mind when you're choosing who to add as your user. The thing that this does is, even if your argument is, well, they will never go into the books anyway, but they could. So this creates what is typically known as the perception of detection. If you think somebody can see what you're doing, then you are less likely to, take the risk of committing fraud. So that's what that's known as. So this is very important when it comes to user management. So please, accounting professionals, add your clients onto the books. Business owners, add at least, like, your CEO, as well as your accountant and that kind of thing. This is your data. You should have access to it. I had a friend who didn't have access, and my eyes bugged out of my head because he had no idea what was going on in his books, and there should be no reason for that. The next feature I'm going to show you here. Now, you might know about this, you might not. You might have seen it sitting there. It's called the audit log. So the audit log is exactly that. Now, and this isn't just QuickBooks. It might be a bunch of accounting, like, I think all accounting softwares have this feature. So this is for people with admin access only, for obvious reasons. But what the audit log does is it does just that. It keeps a log of what everything everybody does in the books is. And you can see it here in my little company. Sorry, I'm just moving this, like, control panel around the screen so I can keep access to it. Here we go.
All good. I know GoToWebinar can be bulky, so no stress.
Okay, I'm just trying to minimize this webcam thing. That's okay. Okay, there we go. So you can see here that up top, we can filter users. So you can, actually, sorry, what I'm going to show you first is, so this is the list here of transactions that we have that can be audited. And you can see that it has a username and it has the event. And you'll also see a little blue hyperlink to go if you want to go further into that, if you want to check out that transaction that was either added or edited or changed in some way, and you can look at it in more detail there. before I do that, the thing is, you might look at this and say, this is a big confusing list of things. No worries, there are filters up here you can also use. So up in the top left corner here, I can pull down users and I can um, just filter by the user I want to see. Now I'm only seeing things that Amanda Whitney did. Hooray. That's great, but I'm still not quite sure what's going on. This is a lot of stuff that she did. She signed in, she signed out, she enabled, Canadian taxes, that kind of thing. So at that point, you can also take a look at what types of transactions you actually want to filter. So you can look at either all transactions, or I think there was a way to further filter this. There we go. Or what you can do, what I did, you can look at just bill payments, just bills, that kind of thing. Or what you can do is there's always that export to CSV button. If you don't use this export button here ever in QuickBooks, it is so helpful. And you can export this to a spreadsheet software, by default Excel. And so I've done that here. So if I just click that button, it will export these transactions. I already have one that I've prepared there, and Excel wants me to start a free trial, and I don't. Sorry. But you can see here that this is like the raw data that I've exported here, and through just a little manipulation, so you can see I added some columns to start categorizing what type of transaction was put in and what was done to it, whether it was added, whether it was edited, that kind of thing. And then I filtered it for just me. So in this case, I only pulled my information here. And then what I did was I just did a quick count, right? So I put a count ifs function in here to just count up the number of things that Amanda Whitney has done to the books. This might actually be helpful. You can manipulate the data however you want, but it helps give you a bit more of like a high level overview. So if, for instance, I have added and edited here, it'll also show you what things they deleted as well. So if I wanted to see how many transactions is Amanda deleting, if you're deleting things out of the books, that could be either you're covering up a lot of mistakes or maybe you're trying to cover up your fraud. Same thing with edited in here. So the thing I'm going to show you here is you can see that up top, like it seems that I added a bill, right? So we're going to start there. I added a bill to ABC Company for $56,000, right? But look at that. I edited that bill later to Amanda Whitney. So suddenly the bill that was payable to ABC Company is now payable to me. I then created a bill payment to Amanda Whitney. And then I edited that bill payment back to ABC Company, and I edited the bill back to ABC Company. This is something that's so easy to change in the books. You can easily change how a transaction was actually, like who the transaction was actually paid to. If I were to go into that detail here, keeping an eye on time, if I click on this little more button here, there's an audit history, right? So I can look at what's going on here. All I see right now is its current state. Currently, it's a bill issued from ABC Company for $50,000. But if I wanted to see the history of those changes just for this bill, I can hit audit history here. And when I do that, you can see here that on the right-hand side of the panel, here we go, is a history of what was going on. So you can see I was doing this a very short while ago. And you can click on each of these events and you can see not only like here's where what was first done. You can see in each of these events, it'll show you what changed. So for example, here's where I added the bill, all well and good. But up here, it shows, now she's edited it, and this is what was edited. The stuff that was taken out, the stuff that was changed is crossed out, and what it was changed to is now highlighted in green. So it gives you a bit of an easier sense of what actually changed on this bill. So take advantage of that. And you might be thinking, Amanda, I do not have time for this. Like, this seems like a lot of nitty gritty work, and it is. But again, you don't have to, right? you don't have to do it. All you really need to do is do it just often enough, like spot check some things, right? Maybe quarterly, maybe annually even. Pull an audit log, get a sense of what people are doing high level, and then try to hone in on a couple of transactions. And then talk to those people about it, whether they did something or not. It could just be 2 transactions that you check. The point is to let people know that you are looking. Again, you don't want to make them paranoid. You don't want to make them scared at your company. But I always did it I did it for my staff. Like when I had junior bookkeepers working under me, I did it as an opportunity to do training. Um, but it just kind of made them aware that I was looking, right? As again, it's that perception of detection that you want to kind of do. So that's the audit log. Incredibly powerful tool. I have seen auditors start to use this now too. Charities in Canada have to get audited every year, and auditors, we give them just access to QuickBooks, and they will pull a big report for the audit log to see who did what, and then it just lets them ask questions. So when they saw that an executive director was creating a lot of invoices in QuickBooks, it just, they asked, hey, we noticed that you created 300 invoices. Why is the executive director doing that? We had an explanation. The executive director was covering for somebody who was on leave. But, it means that like we're that much safer because the auditor noticed it and did their due diligence. So yeah, cool tool in there. The other thing I'm going to show you here is the bank feed. We'll see what I have time for. Oh, wait, I can't. I'm going to switch companies here. So excuse me while I figure this out.
All good. We'll give Amanda a second to pull that up there. But
Yeah,
again, anytime if you do have any questions, we're coming up to Q&A soon.
cool.
So we'll be happy to answer anything that you guys have. And of course, the recording and the slides will be sent to you guys by Thursday. So keep an eye out for that as well. All right, Amanda, you good?
Yeah.
Great.
So let's go over the sample company. Yeah. Continue. So this is QuickBooks sample company. I got an accountant. If you have an accountant subscription to QuickBooks, then they have this lovely sample company that you can use to, just kind of play around in, test out some features. So the bank feed. The bank feed is so important. One thing, if you're a business owner rather than an accountant and you just want to know how much money you have, logging into your bank is not the best way to do that. So I highly recommend, if you have the bank feed connected, if you don't connect it, but if you have the bank feed connected and if it's working, check out, there's 2 numbers you see in the bank feed here. So one is the bank balance, right? This is what's showing on your bank's website, $40,000. But notice that in QuickBooks, they're only showing $21,000. And there could be a lot of reasons for that. One of which is you could have a lot of uncleared checks, or you might just need to add transactions from your bank feed. So that's important to note. But if you, for instance, if you cleared out your bank feed, everything's added up, everything's reconciled, and it's still showing this difference, that's when you want to go and look at your uncleared transactions. What isn't clearing? What hasn't matched in the bank? It could be a mistake, it could be something else. So that's something to keep in mind as well. Yeah, looking at the time, I'm gonna skip ahead to reports. So for everybody out there, but especially business owners, if you don't have access to books, get access to the books and start and play around with the reports that you can pull. Start pulling your own reports. Again, increases the perception of detection. Don't let your accountant be the bottleneck through which all information flows. The whole point of cloud accounting is that we all have access and we can all see for ourselves what's going on. So when you pull your profit and loss, for example, or your income statement if you're not using QuickBooks, you can see here we can play around with the settings, but one thing that we can also do, don't just look at your reports straight for this period, right? Try to compare with another period. And so I have the profit and loss here. Up top, there's this section called compare another period, and I can select the previous year, right? And I can show how much things have changed percentage wise. And I could hit run report. Now there's nothing here because this is a sample company, But I have another one over here. This is kind of a sample income statement that I have, which shows, again, a similar thing. You can see here, this horizontal analysis, this is what QuickBooks does here. So you can see that here's year one of a company, here's year two, and here's how much they changed in between. You might think, hey, this is great, our net sales increased. But you might also see that while net sales increased by 80%, cost of goods sold increased by 140%. Does that seem normal? Is that normal? Maybe it is, but you want to look into it. And when you're in QuickBooks too, if you have access to it, you can actually drill down into that detail. Anytime that blue hyperlink appears, drill down into the detail. You can click on this to say, oh, here we go. These are all the transactions that makes up that total. And you can review this and you can export it to Excel. You can do whatever, and you can even drill down further and pull up specific invoices or bills or expenses or sales receipts to get an even more detailed look. Does anything look weird? Do all the names make sense, right? Are all your suppliers on there? Is there someone on there that you don't recognize? Or does it appear that you paid one supplier an extremely strange large amount of money? Yeah, you might want to ask your accountant or the supplier questions about that. The other one I'm going to point out is the balance sheet. So whenever people go to financial statements, they want to go to the profit and loss. They want to go to the income statement. That only tells half of the story. The balance sheet is the statement. And I do entire seminars on how to read a balance sheet. But that's the one that gives you the true sense of how your company is doing. The balance sheet is the most difficult one to read. Or is the like if you're like a, if you're just a business owner or an executive director or whoever or whomever or whatever, this is the trickier one to read. It's the one that nobody wants to read. It's the one everyone's eyes glaze over when they even try, but it tells a lot of the true story. When we look at our bank balance, what does that actually say? It says here we have $21,000. Great. We have $18,000 in accounts receivable. That could be money that's going into the bank. Take a look at what your liabilities are as well. If we had to use all of our assets to pay off all of our liabilities, what do we have left at the end of the day? That's equity, right? So you might think that you have a lot of money in the bank, but what's sitting in accounts payable? Here it's great. Looks great to me. It says $734, right? Not so bad, but they also have a Visa card to pay off. You might also have money that you've received from people, from customers that you can't use yet. So, for example, if you sell subscriptions, somebody might pay you for a subscription now that they're going to get next year. You can't actually use that money. That money is restricted to that subscription. So even though the money's in your bank, and this was one of the hardest things to explain to my clients during the pandemic, because a lot of them got grants. So they thought, okay, we're going to be great for the next 6 months. And I would have to point out, they have restricted grants in there. They technically can't spend that money unless it's for this particular project. So you have to watch out for that, right? It's all well and good to look at your assets, but look at your liabilities as well. And of course, accounts receivable. I'm just going to quickly go over that one here. So this one is right up at the top. QuickBooks assumes that you want to know how much money people owe you. And here is a typical accounts receivable report. And there's, a few columns that you'll see here. These columns represent how overdue your invoices are based on the due date you put into that invoice. So if things are current, all good, right? You've just set out the invoice. I'm sure they'll pay soon. 1 to 30 days overdue, not great, but still reasonable. 31 to 60, you might be sweating a little bit, wondering where this money is coming from. 61 to 90, really not good. Where is this money? And when, whose door do you have to knock down? 91 and over, that's when you start to wonder if this customer is ever going to pay and if you need to, get a collections agency on them, if you can afford that. Otherwise, you might just write it off if it's not worth the trouble. This 91 and over column is the one you need to keep an eye out on when it comes to fraudulent activity. If there's an invoices scam going on, for example, a lot of those invoices might be just sitting as unpaid in your accounts receivable. So that's why this one's very important to review. the rest. Take a look at your reports, play around with them. Um, QuickBooks is very, very robust when it comes to its customizations of reports, right? If I wanted to customize this, for example, this big green customize button, I'll just take a look at the time. Great. I'll be just a moment.
You're
If you
doing
hit this
great.
big customize button here, there's all sorts of other customizations that you can do. So, for example, you can just, if you want to just look at accounts that might be related to each other. So, if you don't want all of your income accounts to sit there, for example, you can pick things like, I would like to see my billable expenses income compared to my rent, right? Like, how much is my rent costing me versus my sales? Is it worth it to have a store, for example? I did a lot of theaters as well, so they would look at ticket sales versus marketing costs, right? They want to see like if all the money they're putting into, putting ads onto the subway was actually worth the ticket sales that they got in the end. That's the kind of thing they would be looking at. But you also want to look at it for, is it normal? Is this the normal amount that we're actually spending compared to the sales that we're getting? It could be that things are just really tough right now, industry wise, but if not, it could mean something else. So those are just some high level overviews of things you could be doing in your books to better keep it. And again, you don't have to do it all the time. Just do it just enough. Just check on things just enough to let people know that you are there and to better educate yourself as well.
Definitely. Well, thanks so much for those tips, Amanda. That was all you wanted to
Mhm.
cover.
Yes. Well, no, but yes.
As much as we can cram into an hour, totally hear you on
I
that.
did this to myself. I was like, la la la, fraud. There we go. Yeah.
All of the tips, we love to see it. All right, we're gonna move back to our deck here. Big shout out to Felipa who's helping do the slides. So Felipa, if we could just go one slide further, and we'll be wrapping up soon, guys. So quickly before we move into our Q&A, if any of you guys have questions, I did just want to tell you a little bit about Method. So at our core, we are a business process automation tool for QuickBooks users. We have a two-way sync that happens in real time between Method and QuickBooks, all the online versions as well as the desktop version of the software. So just wanted to let you guys know about us. While we are not, an accounting fraud detection tool or anything like that, there are a few ways that we do help QuickBooks users, keep their data secure and practice safe accounting. So a few that I just want to call out there was one, we talked about cloud accounting and how it really is helpful in terms of preventing accounting fraud and maximizing your data security. So if you are a QuickBooks desktop user and you're looking to get some of that information into the cloud, we can help you with that. Beyond that, if you have any non-accounting friends who can benefit from QuickBooks data but shouldn't have access to your whole file, that's something that Method can help with as well. So think about people like your sales team, if you have one. They shouldn't be messing around in your QuickBooks file, most likely. But, some information that's related to accounting could benefit them. Same, they can create things like estimates and invoices in Method that syncs over to QuickBooks. So at year end, things are actually a lot easier for your accountant versus a nightmare, which I'm sorry if any of you guys are going through that right now. Beyond that, yeah,
It happens. It happens.
literally. Beyond that, and then we're going to jump right into Q&A. Again, I know some of you guys do have limits on how many users you can add to your QuickBooks account.
Yeah.
Method is a way to, get around this and even customize permissions so that, certain people can only see certain things at a more granular level than what QuickBooks is offering. Beyond that, we do offer a lot of automations around collecting outstanding accounts receivable and, creating cadences to actually follow up on payments from customers. So those are just a few of the things that we can do to help you. And we do offer a free trial. So feel free to take advantage of that if it's of interest. And again, last call for questions. I don't see anything in the chat right now, so we may be able to let you guys go just a few minutes early after all those great tips Amanda shared. But
I'll add something onto the CRM comments as well. Yeah, CRMs are a great tool for, as Elish was saying, just giving people access to sales, because sales, fundraising, that kind of thing, I've worked with it. They have different goals than accountants do, and so CRMs are kind of that a nice bridge between it, and when you can get a good CRM that has that two-way integration that, manages everything, like all the sales sides of things on your end, while, keeping the dollars and cents together in the accounting software, it is great. And one of the things we have done when things are going really wrong in the books, one of the things I do is I ask for a report for the CRM, because at the very least, I know the sales that people should have done,
Yeah.
and it helps me to kind of align with what actually went into the bank.
For sure. I think one thing we see a lot with QuickBooks users is like sometimes they'll put like potential deals as like recorded revenue in QuickBooks, and that's just a bit of a nightmare. At year end, I'm sure everyone can understand why there's going to be discrepancy with that. So, yeah, if that's happening to you, we can definitely help. All right, so I don't see any questions, so we are going to wrap up. Thanks again for joining us today, guys. Really appreciate your time. Huge shout out to Amanda for her awesome presentation and all the tips that she prepared. So until next time, guys, we will see you soon. Have a great holiday.
Thanks.
Bye.